Well, this could be an interesting week in the markets, guys. Look at these earnings coming out here. FedEx, very interesting to look at FedEx because when shipments are up, is the economy growing? Is it contracting? It'll be interesting to see how things are going based on what FedEx reports. Paychecks, a payroll business. I personally, and I've seen other videos on this channel, think the consumer is a little bit weaker than people think. Again, it's not meaning that the world's going to come to an end. It's just saying these are observations I've made. Nike reporting. Guys, BlackBerry is still a company. I want everybody to remember that. Micron reporting. So guys, if you're new to this channel, we dedicate this channel separate from our main channel because we want to focus on news as it happens. We do 4 or 5 videos a week reacting to what's going on in the markets. We do earnings reactions. If you love that kind of stuff, just to hear it and listen to what's going on, subscribe to the channel. It's going to be a great opportunity to get exposure on what's going on in the week. And when we do these earnings results, you're going to hear more about companies and how we view them and understand them better. So right here, apart from that, not really much to really look at. I mean, not many people are really looking at General Mills. I mean, I get it. But to me, the biggest ones are FedEx, Paychecks, Micron, and Nike. Oh, Walgreens is also reporting this week. I didn't even see that right there. Okay, so Walgreens has been struggling lately. A lot of debt. Company I used to own, I sold it because I thought to myself, this return on invested capital is just not good. Too much debt. I did not like it from that perspective. Guys, other things, new home builder sentiments coming out, case shellers coming out for the home prices. I'm seeing things on Twitter. By the way, if you want to follow me on Twitter at EMPaulG. If you want to be able to comment, you got to send me a direct message. I can follow you. That way you can comment, but you got to be active because I really love the engagement from dedicated, active people. But I look at this and I'm seeing a lot of people saying home prices are going to collapse. I don't agree with that. I've been saying that for a few years now. Even before interest rates went up, I said, if inflation stays high, this could really cause prices to still stay stable. But on top of that, the thing I did not see happening, which I should have, because it seems pretty obvious now, was inventory has stayed super low. Now, there are some pockets of the country where inventory has skyrocketed. Florida skyrocketed. I'm buying a house in Dallas right now, and I've seen the number of houses drop in price. They've some cut in prices. It's been pretty high lately. I just went in contract on a lake house down in Texas that had dropped 30% in its price, asking price over the last 6 months. So there are some things out there, but it tends to be in the markets like the growing markets where there was an influx of houses being built and things like that. In our market in Cleveland, still an inventory problem. And this is not a growing, booming market, and there's still an inventory problem here. So, guys, this is the stock market to GDP ratio. If you're new to watching this channel, I love this ratio. It goes back to 1929. It's Warren Buffett, what he considers to be the most reliable metric at any given time on stock market valuations. And guys, last week we hit 107.8. It's not indicated here from 2021, but the high I remember was 107.7%. So we are at a new high over the last 80 or 90 years. Now, a lot of people criticize this metric. Fine. Oh, Paul doesn't consider money made internet. Okay, I think it's a negligible amount of money. So there's another metric. The 10-year cyclically adjusted P/E ratio. It takes the last 10 years of profit, brings it to today, using inflation, and says, I don't care where the money's made. This is the earnings of these companies. It's at 35.58, 108% overvalued. Guys, I have a poll right now running on Twitter. What do you think fair market in the S&P is? Let me show you what's going on right now, just 2 hours into the results. So 2 hours into the results, where do you think fair value is on S&P right now? 35% of my followers that have voted, 3,500 to 4,500, 25%, 4,500 or 5,500, 21%, 5,500. I'm in this small minority. I think it's in the 2,500 to 3,000. Now, with that said, I do believe the world of making money today is very different than 100 years ago. But also with that said, anybody with a computer now can create a business. We're going to have billion-dollar companies at some point that have 5 or 10 people working there at some point here in the future. It's not the old days of 100 years ago where if you wanted to make money, you had to build a plant, you had to build a factory. So making money was harder, but the barrier to entry was very high. Nowadays, it's easier to make money, but the barrier to entry is very low. And that's kind of a trade-off. Does that mean it wipes itself out? We still look at the averages. This is what makes investing hard. It is an art, not a science. You have to decide for yourself, What's the appropriate number? But I look at the markets and I see what people are doing and saying, and I'm like, man, it's just hard for me to sit there and say that it's so easy to make money and that's an indication that the future is going to be bright. I don't think that's going to be the case. I look at this metric and I'm like, man, stock market GDP ratio, you look back at history, the correlation of this overvaluation to future 10-year returns is negative 0.81. For those of you who want to know, negative 1 to 1 is the correlation coefficient. 0 means no correlation. 1 means 100% direct correlation. As one goes up, the other one goes up by the same amount. And negative 1 is perfect inverse correlation, which means as one goes down 10%, the other one goes up 10%. Negative 0.81 is a high negative correlation. Now, question is, does that really matter right now? Because we haven't seen markets go down besides 2022 and a small 1-month crash in COVID. Yeah, it feels like it's easy to make money. We'll see how that continues. Should it be easy to make money? Should it be easy for crypto to happen? By the way, Bitcoin's down to $61,000 suddenly. I remember NFTs, guys. You remember this thing called an NFT? Remember how that was the hype? Funny thing is, I thought NFT was more valid than cryptocurrency because at least you had you sat there and said, oh, I bought this thing. I own the rights to it. What about crypto? You can create crypto anytime. Now, don't confuse that with what I'm saying when I say, do I think blockchain has validity to it? Absolutely. But do I think the government's going to allow cryptocurrency to operate the way they think it's going to? No, not at all. I don't think cryptocurrency is going to be successful in its current form or the form that all the crypto bros think are going to happen. So for those of you guys out there who have man buns, who drive Teslas, who love crypto, and you have your Apple Watch telling you what Bitcoin price is doing right now, don't worry, I'm not attacking you for the crypto stance. Yeah, actually I am. I'm sorry. I absolutely am attacking you. Guys, I don't see the validity to crypto. Time will tell. But of course, Bitcoin's been up a lot, so it makes me look like a fool, and I'm fine with that. I'm comfortable with that. I'm here to teach a process based on intrinsic value. Crypto, in my opinion, has no intrinsic value. I believe that every investment is the present value of all future cash flow. If you look at this, the 10-year of earnings, your earnings are going to come over time, right? Your investment returns are going to be based on the present value of all those earnings and what price you pay today. The more you pay for something, the lower your return is going to be. The less you pay for something, the higher return is going to be. If this iPhone is worth $1,000, your return is greater if you pay $100 for it versus if you pay $900 for it. This is just simple math. This is not, the only problem is when bull markets are happening, no price is too high for this amazing story. When bear markets are occurring, no price is too low for this terrible story. But remember, stories and price are very different. Stories and value are very different. There is a price to pay that's too high, and there is too low of a price at some point where you can sit there and just get amazing value. That's what I'm trying to teach here. And as of late, it's been very difficult because you see NVIDIA skyrocketing like crazy. I read an article the other day that said NVIDIA's revenue is too hard to determine, and that's what makes it hard for investors. Yeah, it's true. It is very hard to determine what NVIDIA's revenue is going to be. The question I ask you is, what has to happen for NVIDIA to justify today's price? And is that a reasonable assumption for the company? Is that a highly probable assumption for the company? That's the question I ask. So guys, if you like what I'm saying, if you don't hate me yet, subscribe to the channel. I love doing these videos. And if you're not on our main channel, check that one out too. Thank you very much for your time.